Perfect. Okay, well, good morning, everyone. My name is Christina McGreevy. I'm Head of Business Support Services at Kinore. Welcome to our latest webinar in our Build and Scale series, Knowing Your Numbers and Cash Flow. Kinore is an award-winning accounting and business services practice. Today, the firm ranks among the top 20 accounting practices in Ireland in terms of size. Our mission is to provide superb financial advice and services to ambitious SMEs, high potential startups, and larger businesses wherever they are. We have a multidisciplinary team of over 90 professionals with specialisms in areas including taxation, corporate compliance, management reporting, bookkeeping, payroll, VAT, IT, marketing, and company secretarial. I'm joined this morning by Tom Francis, Head of Accounting at Kinore. So Tom leads multiple teams of accountants across Kinore and has exposure to a wide range of industries and business types. Tom will take us through the gap between cash and profitability today, why management accounts matter, how to stay on top of pricing and margin, and they're all key topics to take you from compliance accounting to decision making. It's important to note that today's webinar is for general information purposes only. For specific advice, we always ask that you get advice from an expert. That being said, Tom is open to taking questions today, so use the chat and Q&A feature, and I'll be happy to pose questions on your behalf. So over to you, Tom.
No pressure at all.
Yeah.
Thanks, Christina, for the introduction. Yeah, do you know what? It's a very it's a very kind of timely topic. I think this whole profitability and cash flow piece. And I thought I'd start this morning by maybe just starting with a simple question, because if I asked our attendees this morning what their bank balance is, they could probably tell us. They could probably within reason. However, if I asked what your profit margin is this month, would you know? Or whether profitability has improved over the last 3 months, or whether your costs are increasing faster than your sales. Lots of questions that are kind of away from that bank balance, as you can see. And recently we carried out our SME confidence and growth survey at Kinore here. And I found the results really interesting, because what we could see was that 74% of business owners told us that they're confident about growth in the next 12 months. And that's really, really encouraging. There's always a but, right? There's always a but. But at the same time, 45% said they're confident that they have timely financial information available to support that decision making. So that means then, by default, that more than half of business owners in our survey aren't fully confident they have the information they need to make those timely decisions. So as I said, timely this morning that we have those stats to kind of frame the conversation. Confidence is strong, which is really important with business owners, and over a third of respondents expect to increase prices over the next 12 months. We know cost pressures are still there. Everybody, I would say, knows cost pressures are still there, but the challenge can be sometimes that the financial visibility isn't where it should be. That's where we'll go today. And really, I think knowing your numbers isn't just about debits and credits accounting. It really frames the better decision making. So I think, Christina, I think, as you said earlier, if our attendees have questions they'd like to pop through, I think more than welcome to do that. Kind of makes it more interactive, and we kind of be able to kind of move in a direction if we get a sense of where the room is at. So,
absolutely. I'm going to launch a quick poll as well here, Tom, on assessing business performance. So I'd love to hear from our attendees. Are you currently assessing your business performance on a regular basis? And like monthly or quarterly, and whether or not if you're not, so if you could, you should see the poll on your screen now. So it'd be great to get your answers.
Yeah, and we can let our participants complete the poll while we're chatting there. Christina, I might just give a kind of a high level example of a conversation I had this week with a business owner, if that makes sense. And probably isn't in isolation as well. So I had a conversation with a client who's doing over 800k turnover, projecting for the million, and I asked them how they felt the business was performing, and their response was, I think we're doing okay, Tom. There's enough money in the bank, and if we're being honest, that's probably what business owners measure performance. There's enough money in the bank, we can keep the lights on. The wages are getting paid, suppliers are getting paid, things must be okay.
Mm,
But you have to take it beyond the bank balance, because the bank doesn't tell you what your margin is, what your profitability is, whether the costs are creeping up slowly, month on month on month.
mm,
And I suppose indeed whether the business is becoming, more or less efficient. And that can be the challenge. So you can have cash in the bank instead of still be making money, or not be making money on those accounts. And the bank balance gives you one piece of that story. I think the
yeah.
management information behind that then tells you the rest. And we'll talk then, about why management accounts matter. Do you
Mhm.
want to jump back to the poll now, Christina, or will we keep going?
Yeah, I'll tell you,
Mm,
57 respondents have told us that they assess their business performance on a monthly basis, and
okay.
14% then quarterly, and 29% have said no. So, um, I suppose the question to pose to those people that say they assess it on a monthly or quarterly basis, how detailed do you assess your business?
Mm,
That's probably what you want to consider today. Whether
yeah.
that's, as you say, so many business owners are assessing their business performance just purely from do I have money left over at the end of the month? Maybe looking at their profit and loss account,
Yeah.
but as you say, it's going beyond that, and looking at the
Yeah.
P&L, looking at the bank.
And that's it. That's encouraging. And maybe, and hopefully we're speaking to the converted, if we got 71% here that have, that are making an assessment beyond the bank balance. Often when people hear that, the phrase management accounts, sometimes they assume we're talking about something complicated.
Mm,
And I suppose what I want to just, I suppose, broach that topic, because often we're not. We're talking about having current information that helps you run your business.
yeah.
And I would always recommend that for businesses, above, definitely like above 1 million turnover, definitely monthly or quarterly management accounts should be the standard. Yet
Mhm.
many businesses still don't have that. And
Mm,
I feel like the cost can be significant, and I'll give that to you by way of example, because we're working at the moment with a retail business turning close to 3 million, significant enough turnover in my view, and they don't produce management accounts during the year. Their first real view of performance comes after year end, and when we sat down then to look at the numbers, the picture became clear very quickly. Sales were really strong and growing. Gross margins are broadly stable, so like indicators, very positive. And the problem wasn't gross profit at all. The problem was
okay.
actually overheads. And over the previous 12 to 18 months since the last set of accounts were done, the costs have been creeping up steadily. You have things like wages going up,
Yeah.
utilities are going up, operating costs, nothing dramatic.
Mm.
Just lots of small increases that kind of accumulate over the course of, the year. Um, so we have a busy business with turnover over 3 million, was only just about breaking even. And I thought, like, and I said it to the business owner, like, imagine if those numbers, had been available kind of on a monthly basis or quarterly basis, even, you could have identified an issue earlier and course corrected. They could have adjusted pricing, reviewed costs, made decisions, I suppose, while there was still time to influence the outcome mainly. Um,
Yeah.
yeah, and instead, it said it was, they find out after the event. And by the time they find out, they're probably 6 months into the next financial year as well, of course, because,
Of course.
accounts are prepared, a number of months after year end.
Mhm.
So I feel anyway, personally, that's the real value of management accounts. It's not just producing the reports, it's about, identifying the problems before they become an expensive issue to fix, really.
Yeah. Yeah, that's so valuable, isn't it, Tom? Because that real life example that you have there just shows that that business was leaving opportunity on the table, that they have a successful business. Perhaps it would have been open to either looking at slight price increase that would have impacted their profitability, or indeed looking at tightening up their cost base. So, but
Mm.
either way, there were business decisions that needed to be made in that business over the course of that year that weren't made because they didn't have the information to hand.
Yeah, exactly. Yeah, that's
Yeah.
that's it in a nutshell. Yeah.
Mhm.
Um, so I think, for the next part then, we talk about, I suppose maybe the quality of information the business owners have, because as
Right.
we said earlier, like the poll you've ran there, is very shows a very healthy number of 71% all in. Um, when we ran our business and growth, our survey, 45% of owners actually said that they were confident they had timely information available to support decision making. And so that means in effect then more than half aren't fully confident in the
Mm.
information they're relying on. And decisions are being made every day, things like hiring decisions, as you said, Christina, pricing decisions,
Yeah.
investment decisions. Do I invest in that piece of equipment? Do I invest to expand? Do I, what decision am I making, and what information have I got? Have I got the
Yeah.
management accounts? Have I projected out cash flow over the next 3 months, 6 months, 9 months to see kind of where the pressures will be based on the current assumptions. But the reality is that many business owners are making those decisions based on information that's weeks or months old, and maybe a year old, the annual accounts.
Yeah.
I believe tax returns, definitely you have to do your tax returns, your compliance is really important, but they're all looking backwards. And business owners would tell me themselves, like, I don't really care about, last year's gone in my head. I'm actually very much so planted in the present, and looking forward. But
Mm.
yeah, so for what business owners need most is information that helps them to understand what's happening, right now. Given that that's where the business owner is at in their own head, and it's just so. I suppose it's having that information to support the decision making that they're about to make, whether that's, as I said, a hiring decision or an investment decision or whatever that might be.
Yeah. And I'm sure it's very hard for like founder-led businesses or owner-managed businesses to step out of that working in the business, to working on the business at times,
Yeah,
Tom, right? But if you had a trigger where, let's say, if you're still a small business, that you're looking at it on a quarterly basis, that you have a quarterly meeting and that you sit down and you force yourself to write down actions in minutes, and it's really keeping yourself accountable for
yeah.
that, isn't it? And whether you build a team around you or whether you just bring somebody along to bounce off of, or whether it is with your accountant, it's the importance of like putting that in the diary and holding yourself accountable to it.
You made a good point there. Like, it's actually almost, inviting yourself to a meeting almost, like it can be
Yeah,
something as simple as that for, an owner managed business where there isn't a huge squad of people around,
that's it.
just keeping it, as you said, keeping yourself accountable.
Hmm.
Sometimes businesses find like, well, I'm much too small to be investing in a finance function.
Yeah,
But it depends. It depends, what you mean by that, because we see a lot of businesses take on like fractional
yeah,
financial controllers or fractional CFOs, where they only spend a day a week or a day a month working with you in your business, and
yeah,
sometimes that can be a massive payback. Yes, these things come at a cost, but the payback is in terms of, a different view on your business, and ultimately then like the ability to kind of course correct, maybe having someone challenge assumptions as well. That's really important. Like someone actually
like,
who's outside the business and has a fresh set of eyes, and ask those, what you call, those silly questions.
yeah,
But sometimes those silly questions can make the person receiving those questions think, and maybe question themselves. So, yeah, I think it's all relative, but
hmm,
definitely as businesses are growing and growing, you definitely have, like, it's the responsible thing to do is actually to have those numbers to hand for sure. Yeah,
yeah, yeah, that's it. And to invest that time on working on your business, regularly
yeah.
as well, not just in it as hard as it is. Absolutely.
Indeed. And I thought then, Christina, we jump over then to, pricing and margin,
Yeah.
for the next piece, because that's probably where we've seen the biggest challenge at the moment is
Mm.
actually margins. Because our survey shows that 37% of businesses expect to increase margins over the next 12, prices over the next 12 months. So 37% expect to increase prices. And that tells us then, like, cost pressure is still very real.
Mm.
And often the biggest danger isn't costs increasing, because costs increase over time. But the
Mhm.
biggest danger, I feel, is not realizing the impact those increases are having on the business. Because one of the most common conversations could be like, sales are up, we're really busy, and things
Yeah.
they seem to be going well. But when we look at the numbers, profits haven't improved, and often in some cases they've gone backwards. I had that actually
Mm.
issue with a client yesterday, going through the numbers, and sales were up considerably, but the gross margin was actually down, because it depends on the mix of the work you take on. Then, so if you take on
That's
less
it.
profitable work to drive the top line in
Mm.
sales, you know, your cost could go up higher than your sales, and it impacts the margin. So my
Yeah.
worry was actually that, they weren't aware that they were doing taking on less profitable work and all that, and I just wanted to, make sure the responsible thing to do is to highlight that as well.
That's it.
So usually the issue isn't actually sales; it can be the margin. You have your labor costs increase, you have your supplier costs increase, and operating costs increase. Everything's increasing, at the moment. Um, and I suppose to be actively tracking those numbers is the magic, because those increases just otherwise those increases just get absorbed, and nothing's done about it. You have the owner working really hard and the business is getting busier. Yeah.
Mhm. And you've touched on a lot of key performance indicators there, Tom, or rather KPIs, and that's all well and good if you have those to hand and you have that information available to you, right? But there's a
Yeah.
lot of businesses that are maybe doing that on the back of an envelope, or that sits in the business owner's head, right?
Yeah.
Is that fair to say when you're dealing with
It,
business owners?
like it can be like,
Yeah.
often the business owners have a very good take on where things are going. Like, they know, like, on particular deals that they make, like
Hmm. Yeah.
what they're making on a particular deal. But it's when you kind of put it all together, I think, is when you see the I suppose the true picture of how it's all going overall. So I think, yeah, that's fair to say, Christina. Yeah.
Yeah. And so it's like breaking them down and documenting them and actually tracking your KPIs over time is where you become informed and are able to make
Yeah.
those decisions. Because as you say, it's all you can think everything's going great, we're flat out, sales are great, everything's on the up, not realizing, yeah, but equally so are all of your costs, and the costs of
Yeah.
doing business is increasing across the
Yeah.
board.
Yeah.
So, yeah.
Exactly. And like, even as you're asking that question, I thought, yeah,
Mhm.
like, you know, you get the basic bookkeeping right, get the
Yeah.
basic records right anyway, at least. So you have your revenue booked and recorded, you have your cost of sales are in there, you have stock, book the stock, and at least then you've got, you don't have to do anything fancy if you're not ready for it, but at least have those kind of basic KPIs there where you're like, okay, and if you don't know how to do it, like, there's obviously, like a competent bookkeeper slash technician would be well versed in doing that. But it would just mean at least you kind of have a situation where you're looking at a reasonable P&L, and I suppose, yeah, that will definitely get you a step in the right direction. So it doesn't need to be a big leap, but I think little steps in the
Yeah.
right direction. Yeah. So
Great.
for the next part, then we might move then from compliance to advisory, because, like, I always say the same thing to clients. Like, I can tell what good looks like, I can tell what we're seeing in other businesses, and I can always highlight the risks and point out the opportunities. But ultimately, like, it's the business owner's business, like, they own the business, and ultimately they either make the decision to invest or not to invest in the financial information, because, in my view, management accounts aren't really an accounting investment; they're a business investment. Um, because, like it's fact, businesses that understand their numbers and that are reviewing performance regularly, they're making decisions with current information, and they're identifying issues before they become major problems.
Mhm.
Um, I also like to stand over the fact that the days of meeting your accountant once a year, yeah, and hoping for the best, they're gone. Yeah, they're gone. Business owners have to remain compliant. You have to do your tax returns, but that's red tape. Like, that's just you're keeping your head above the water with the CRO and revenue and all those authorities. But I think the relationship with your accountant needs to be about helping business, you make better decisions during the year. And that's how often we work with many of our SME clients, Christina, is like,
Mhm.
to be a regular reporting cycle, whether that's monthly or quarterly, um, depending on what the business needs. And then, that you produce a set of management accounts. Again, it doesn't have to be anything crazy or whatever. And but the value, the magic, I think, is in going through those numbers then, or highlighting things that we're seeing, and just making sure that the business owner is aware. And often, actually, we've seen businesses been able to course correct in good time, and been able to, yeah, whether that's just pricing or whatever it might be. Yeah, so it definitely works for sure.
Yeah, there's no doubt that there's huge value there in those conversations. You've said something really interesting there, is that the day of meeting your accountant once a year and hoping for the best is gone. And that's because, yeah, it's something that you say regularly, Tom, is that the end of year accounts are old news, right? by the time you're talking about that and talking about your tax return, there's very little you can do to impact that when you're looking at your finalized set of accounts. Whereas what you want people to take away from this is to take ownership and be proactive in managing their finances of their business, right?
Yeah, that's it. That's it.
And not
Yeah,
wanting
like
to do it alone. It's reaching out to your accountant. That's what they're there for. They'd only ever be happy to take a call and meet with their clients.
yeah. Oh yeah, like that's it. It can be a lonely place, setting up your business, being a business owner, founder, and um I would say, yeah, like if you have an accountant, take full advantage of that if you can. S- like often it can be a case of like, you know, the business owner is better suited to focusing their efforts on the business itself and making those strategic decisions. In the earlier stages of business owners take on an awful lot because they just have to, Christina. Like,
Of course.
there's this, their bookkeeper, their sales, their operations, their everything. And
Mm,
as things settle, as the business makes revenue, and maybe that's no longer a worry,
mm,
business owner then could focus on maybe strategically, running the business, as you say. Like sometimes it's very difficult stepping away, and over the years, like I've had to just have a chat with some business owners just to I suppose maybe just say just that, actually. Look, leave, you're the expert in what you do, but leave other areas to the experts, whether that's having a bookkeeper there, or having someone, a fractional CFO, or an accountant there to help you with your monthly numbers.
mhm.
Because like if you're buried in the numbers, you don't have the ability then to stand back. There's no time, because you've done the numbers, and next thing you have to run away and run the business again. But if you have support there in running those numbers, at least then the value, I feel, is having the conversation about the numbers then, so you can kind of be more strategic. And like a lot of that naturally happens anyway. But I think it's just I think it's no harm to say it here as well. So like for business owners, um, you know, you can take on a lot, but take on, I think, when the time's right, take on the right things, then that kind of drive the
Mhm.
business forward. And I think you alluded to that at the start as well, Christina, that you want to, is it working on the business or in the business? I think that's the difference, actually.
It really is, isn't it? And
Yeah.
that's the goal. And what I often hear, and actually it's something our CEO always says, is that it's very lonely running a business, as an owner manager or as a founder or anything, there's very little people that everyone is always looking up to you for the answers. And then you can be there at the top, not knowing really the answers. And that's where you have to lean in to that support network around you, whether that is your accountant, whether that's other peers within your network. But I think when it comes to finances, people are inherently private,
Mhm.
about them, and that's where it becomes really challenging. And so the relationship that you build with your accountant is one of the most important as you're growing a business, I would think, Tom.
Yeah, it definitely is. Yeah, and I think you made a good point, Christina. Like you know, your accountant is there, through good times and bad. I would say don't be just using your accountant to rely on them for compliance. If you are, then you need to either, you know, get them to work with you more regularly, or
Mm,
have, or then maybe potentially outsource the services, those fractional services we talked about. But don't be, I suppose, um, yeah, don't be, I suppose, held back by that. Like I know ourselves in working with our clients. Like we love to hear from our clients during the year as well. We get in touch with our clients during the year, but often I think the greatest value is like when the client knows that they or maybe they don't know what they need or want, but they know they need something. As you said yourself, like the business owners, and look, everybody, like we don't all have the answers, but at
mm.
least at least we know where to go and find them, I suppose, and whether it could be, reaching to a network or whatever that might be. But yeah, so I think there's a lot there, but I think, pulling right back in here then, Christina, like
Yeah.
I think survey that we have open at the minute really
Mm,
told us, I think, three important things. That 74% are really confident about growth, and that's really, really encouraging. 45% are confident they have the accurate, timely financial information. And then only 30%, 7% expect to increase prices. That means then that there's 63, hopefully I have that right, percent aren't planning to increase prices. Which
yeah.
means, which I feel anyway, that there's a lot of businesses out there that are potentially leaving money on the table. Most,
Mhm.
I would say most customers are expecting to see price increases. So I just want to put that out there. Um, by not increasing prices, you could be working harder, taking on more business to kind of fill the gap that the current business you're serving is leaving. So you're working busier, harder than ever, and
Yeah.
probably standing still. So I suppose making those decisions in a timely manner are important. Business owners are generally optimistic, and that's important. They want to grow,
Mhm.
and yeah, I think it's just, I think to bring it full circle, then many just need to have that information. They need to make those next decisions, not for compliance, but but just for the general, I suppose, safety net of the business.
Yeah, and just to bring back that case study that you had, Tom, so ultimately you're looking at a lot of those clients that have submitted and said to us, yes, I'm confident about growth. Yes, I'm concerned about winning new business, but I don't intend to increase my prices. That's me
Mm.
paraphrasing, but let's say, and then it's if they were presented with that case study and to understand, okay, you can win new customers, you can grow your business, yes, but will you grow your profitability at the same time if you don't make the changes now? And look, there may be businesses that aren't price sensitive or aren't as cost sensitive, and that may be the case for them where they can continue to grow profitability without being impacted. But it's as you say, it's something that you say often. Are you leaving money on the table?
Mm.
If you could increase it marginally in line with how your costs are increasing, then it means that you're growing your profitability as well as growing your business.
Yeah, I think you put it in a nutshell there. Yeah, very well put. So yeah, I think I'm happy enough with that, Christina.
Yeah, no, that's great. It's been a fascinating discussion with you, Tom, and hopefully all of our attendees have found it really helpful. I have asked if anyone had any questions, and I was happy to pose them on your behalf, but hopefully they've found this discussion quite helpful in terms of what to do. Definitely the key takeaway is look at the KPIs of your business. Cash in the bank does not mean profitability, and to reach out and talk to your accountant. So we're getting some reactions there. So hopefully everyone has found it helpful. Thank you so much for your time this morning, Tom. Super helpful as always. And I hope everyone has a great week. Thank you.
Thank you all. Have a great week.
Thanks. Bye bye.